Hi, everybody, and welcome to the May 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. April was another tough month as markets bounced around on worries about tariffs and trade policy. The S&P, Dow, and Nasdaq all sold off sharply to start the month, but then recovered as markets normalized around new policy expectations. Overall, the month ended much better than it might have, with the Nasdaq showing a small gain, while the S&P was down a bit and the Dow did worst of all. The story was similar for international markets, as foreign stocks also sold off sharply at the start of the month, before later rebounding. Here, too, we saw a better-than-expected month as a whole, with both developed and emerging market stocks ending the month in positive territory. Bond returns were also choppy as interest rate swings intensified. Despite the volatility in rates, the 10-year Treasury yield ultimately ended the month slightly lower than it started, raising bond prices and marking 4 straight months of positive returns. The roller coaster markets in April were driven by the shifting tariff landscape. Liberation Day on April 2nd shocked markets with much higher than expected tariff levels. Stocks sold off sharply following the initial news, only to rally when a 90-day delay for most tariffs was announced later in the month. Going forward, policy uncertainty continues and could drive more market volatility. But while tariffs and trade policy were the major factors driving markets, April's fundamental data was still largely positive. We're roughly halfway through first quarter earnings season, and so far, so good. The average earnings growth rate for the S&P stands at just over 10%, which is well above initial analyst estimates for about 6.5%. So far, at least, companies are still growing at a healthy rate. The economic news also showed signs of continued growth. The March job report showed that hiring remains strong, with over 200,000 jobs added. Consumer spending also improved while inflation fell. And while this is backward-looking data, it was still encouraging to see the economic foundation is solid. Looking forward, though, there are things to worry about. Business and consumer sentiment continued to turn down in April, which puts future spending growth at risk. Additionally, the first quarter GDP report showed that the economy contracted modestly to start the year. While this was due in large part to a surge in imports, it could be a warning sign for the rest of the year. Beyond the economic data, of course, markets also face a number of other risks. Trade policy remains in flux, and until we get some kind of settled results, we'll likely see more market reactions. International concerns are also on the table, like the continued conflicts in Ukraine and the Middle East. On the whole, we do have a lot to watch out for, and we should be prepared to weather any market reactions. But while the risks are real, so is the fact that we're still in a pretty good place. With a healthy job market and the potential for more policy clarity to improve confidence, analysts still expect to see continued earnings growth this year. Given that, the most likely long-term outcome is for continued growth, despite any shorter-term bounces. That's not a bad place to be. That's it for this month's update. Please join me again next month for the latest news, and in the meantime, stay safe, stay sane, and stay healthy. Have a great spring, and thanks for watching.